Hi folks, welcome to today's Bobcast from Bob Binney Wealth Management. I'm Bob Binney.
I'm Jessie Thompson.
And we're both certified financial planner professionals with Bob Binney Wealth Management right here in Lincoln, Nebraska. So today's brief Bobcast is about should you invest in the stock market at all-time highs? And it's a kind of a continuation, or it is a continuation on the Bobcast last week that we did about
whether or not we think the stock market is in a bubble.
Right.
Which we don't.
Right. So
inevitably, no matter what's going on in the stock market, if I look at any financial news website, there is always an article somewhere that shows up that talks about how we're around the corner from some kind of a crash, or that now is not a good time to invest. So why we wanted to address this subject is because the stock market, the S&P 500, is at an all-time high right now, and you might see articles or things on social media that are saying it's not a good time to invest in the stock market when it's at all-time highs. You should wait for it to go down before you invest. And we not only do we not think that's true, the data shows that that's not true also.
Right. So there are going to be times when the market drops and drops substantially. If you have an appropriate time frame and keep your money invested, let's say 5 years or more, you don't need to fear this. It's just a completely normal part of investing. Ups and downs are a normal part of investing, but we are not on the verge of a big drop because the market's overvalued. We know that. Trust us on this.
Yes, but there are things that can drop the stock market that nobody can really necessarily predict or prepare for, and that's just part of investing.
Right.
So the data is interesting when it comes to investing during market highs. Over the last 45 years, if you put money into the stock market on a day where the market is hitting an all-time high, your average return that you would get in the following year is 10.5%, which is actually very close to the average return over history of the S&P 500, which is between 9 and 10. The probability of seeing a positive return in that next year was about 70%, 68%. So over a 3-year period, if you invested on the day that the market was at its very highest, the average return total over that 3 years is 36.7%, which is actually higher than the 3-year average of 33.8%.
So there's no reason to fear investing when the market just reached an all-time high. So what we just want to remind everybody is time in the market trumps timing the market. Trumps, just joking, play on words there, but time in the market beats trying to time the market. And now is always a better time than waffling back and forth trying to get in at the perfect time. You're not going to get in at the perfect time. When you have the money is the perfect time.
Exactly. So thanks so much for joining us. If you're watching this on YouTube, be sure to like and subscribe so that you can see our podcasts every time that they come out. And it also helps other people to be able to get the free education that we put out. And
if you have a question or comment for us, you can email us at bob@bobbinney.com or jesse@bobbinney.com anytime, or just call the office. So
thank you. Have a blessed week.
Thank you.